Hi, I'm Irina Ryshkova, your nonprofit auditor. And today we are meeting for our NAP number 6. NAPS stands for Nonprofit Auditor Points, and they design to have a discussion about accounting and financial issues. I design NAPS to help nonprofits to navigate accounting and auditing world and better understand how auditors think and what is the rule of accounting. Before we start, I want to say disclaimer that this is not authoritative video. These videos are simply my giving back to nonprofit community to share my personal experience as an auditor for many years, where I started with Deloitte & Touche and then later worked for the smaller CPA firm. And now I have my own practice for many years in downtown Oakland, where we serve nonprofit organizations by providing auditing and tax filing services. Let's start. In today's NAP, we're going to talk about Statement of Functional Expenses, or sometimes we call it SFE. Statement of Functional Expenses, in my experience, one of the most important statements for nonprofits, because this statement is used very widely by many readers of financial statements, by donors, by rating agency, management, board. This statement provides a lot of details. Why is that? Nonprofit world, nonprofit entities are united in one bucket that called nonprofits, but they are very unique. Each nonprofit is very unique, and they provide various services. They can be service organization, they can be child care, elderly care, school, social justice organizations, various foundations. They can be medical office. Various businesses are lump summed together in one bucket called nonprofit only because they are tax exempt under the IRS, Internal Revenue Services. And there's very little criteria to assess effectiveness and efficiency of nonprofit organization. And Statement of Functional Expenses specifically serve that purpose. They help management and readers of financial statement to assess efficiency and effectiveness of nonprofit. So let's start talking about Statement of Functional Expense itself, and then we will see how that statement can be useful and what information we can derive from Statement of Functional Expenses. As we discussed in the NAP number 5, Profit and Loss or Statement of Activities present statement by its nature, expenses by its nature. On General Ledger, Chart of Accounts present expenses by its nature, natural type, such as payroll expenses, travel, utilities, supplies, advertisement, depreciation, etc. Statement of Functional Expenses present expenses by two different types. Besides natural type of expense, it's also presented by function. There are three main functions: program expenses, number 1, management and administrative expenses, number 2, and fundraising type of expense, number 3. Number 2 and number 3, which is management in general, or administrative and management, and fundraising, they called supportive type of expenses. And number 1 is program, which is main. What type of program expenses should be recorded under program? Program expenses are expenses that directly associated with the mission of nonprofit. Expenses that are spent directly to fulfill mission of nonprofit are program expenses. Everything else is supportive type of expenses. If expenses spent to admin and manage nonprofit, that would be administrative and management type of expenses. And fundraising expenses, it's expenses that nonprofit incurred in order to raise the various fundings, including grant writing, including promoting nonprofit, asking for the support for nonprofit. These are all fundraising type of expenses. Let's talk about program expenses. Organization can run several programs. Under standards, if organization has more than one program, each program needs to be presented separately. Therefore, if nonprofit has 2 or more program activities, statement of functional expenses needs to present column for program number 1, program number 2, program number 3. Now, how many programs nonprofit can have? A lot of various programs. However, it is recommended to management to analyze its program activities and determine if this program is really separate program or it's just activity inside the same program. It's also good to consider materiality of the program. If the program is really not that material, maybe it's not deserve its own presentation. However, if management does believe that it's a separate program, it needs to be recorded separately as a program activity for that program, and on the financial statements, in a footnote, each program needs to have its own description. What it does, what purpose it serves, and why it's a separate program. Management in general, or administrative and management activities, include activities that pretty much of admin stuff, admin type of expenses, and they support program activities. And fundraising activities, it's not just fundraising event. It's all activities that help nonprofit to do fundraising. Sometimes nonprofits believe that they don't have any fundraising activities. However, it's very unusual for nonprofit that receive contributions and donations have no fundraising activities. When nonprofits spend time and resources to send thank you letters to their funders, or to solicit funds, send letters, please donate us, please support our activities, this is type of fundraising events. Therefore, management has to really spend time and develop policy and procedures to define what kind of activities represent fundraising activities for nonprofits. Allocation of expenses by function, it's not just an accounting matter. It's primarily task for management and program folks. There has to be some methodology that developed by nonprofit how expenses are allocated between function. And methodology has to be reasonable, that really represents the activity that nonprofit conducts. What kind of methodology nonprofit can use? Typically, one methodology cannot be applied to all expense accounts. Sometimes nonprofits use allocation methodology for each expense transaction. It creates a very precise allocation. However, it can be very time-consuming and not effective. Therefore, most nonprofits use methodology that's unique for specific groups of expenses. For example, payroll and salary and benefits and payroll-related expenses can be allocated based on percentage that people are working on different functions, and once that percent is developed, maybe monthly, maybe semi-annually, maybe annually, all expenses then allocated according to that percent, payroll-related expenses. Supplies can be, each expense can be allocated, depends on the function where the supplies can be used. Rent can be allocated based on percentage, how much building or office space is used for each function. Depreciation in the same sense can be used depending where these assets are used, in which function. Therefore, the best way to assess how expenses should be allocated by function is to understand the operating activities of nonprofit and look at each natural type of expense and see what methodology is applicable for that type. Then determine it in a policy, share that policy with the accounting department, and have a meeting periodically to have a discussion about allocation of expenses. Allocation of expenses by function can be performed outside your accounting system, or it can be performed right directly in the accounting system. A lot of nonprofits use various functions inside the accounting system, such as classes or jobs in QBO, to allocate expenses by function. Regardless where the organization does this allocation, it needs to be done periodically. What information statement of functional expenses provide to the readers? Rating agencies typically look in a statement of functional expenses to see how efficient nonprofit uses its funds. In the past, and most likely in present, most rating agencies preferred to see that between 70 and 75% of all expenses are allocated to program. What it means that on every dollar that nonprofit spends, 70 cents of that dollar goes directly to the program activity that serves main mission, organization's mission. However, it could really vary depending on where the nonprofit in their stage of maturity, if it's a young nonprofit or a nonprofit that builds its internal sustainability and needs to invest in a lot of admin support in order to grow and accommodate larger grants in future, we would typically see larger administrative activities, expenses. For mature nonprofit, and especially a nonprofit that does not use a lot of government grants, we might see less administrative expenses and more program expenses. Regardless, what is the percentage of expenses was allocated to program admin and fundraising, nonprofit should have a story behind what this allocation represents for them. Why this specific year they spend more to program activity than in previous years, or maybe why it's more on admin activity than in previous years. Admin activity, sometimes, like I mentioned before, nonprofit may be expanding and opening a new location and working with a lot of consultants and other admin, requiring another more admin time to build that capacity. Or maybe nonprofit decided to expand new market of donors and really working with funders and donors this year. Therefore, it has a lot of fundraising expenses, or maybe had several major fundraising activities, special events, and so forth. Statement of functional expenses should represent the story that nonprofit wants to convey to the financial readers about the status of nonprofit, where nonprofit put its effort in order to grow and be sustainable. But regardless what the story is, it is critical for nonprofit have a methodology of allocation of functional expenses. This methodology needs to be revisited annually because program activities and support for nonprofit does change annually. And even if it's not a lot of changes happening from one year to another, it is still a good idea to revisit the allocation methodology and confirm and still correct. Statement of functional expenses can serve many purposes. It provides valuable information to the management to see where efforts are put. It provides valuable information to rating agencies and to funders. And methodology needs to be reasonable. It needs to be enough detailed, but it also needs to be manageable by accounting department and not too complicated that it makes too difficult to produce valuable financial statements. Again, to remember that when creating methodology, nonprofits also needs to consider materiality. For material accounts or material activity, methodology needs to be more robust and more detailed. If it's not material transactions and not material activity, probably simple allocation, like percent allocation or some other methodology will work. To conclude, today we talked about statement of functional expenses, allocation by 3 types of function, program, administrative, and fundraising, and how important it is to have a proper, robust allocation. Allocations is made purely on a management estimate. It needs to have a good, valuable methodology that's supported by activity of a nonprofit. Thank you so much, and I'm looking forward to see you for our next nap number 7. Thank you. Have a wonderful day and enjoy your accounting. Talk to you soon.